Good morning, everyone. This is Marshall Gidler bringing you the morning comment for January 12th. Well, U.S. non-farm payrolls soared by more than expected in December, and the previous 2 months were revised up, even though they were already very good. Unemployment fell more than expected, and the average work week held steady, too. Sounds great, no? Instead, the market focused on the drop in average wages. Fed's funds rate expectations were down sharply. Investors apparently thought that the sluggish growth in average earnings, coupled with falling oil prices, would probably dampen any inflationary pressures, and as a result, they pushed out the time when they expect the Fed to start hiking rates. Personally, I think the earnings figures may be an aberration, as they don't correlate with everything else that's going on in the labor market. This was also the view of Atlanta Fed President Lockhart, who called the decline in average hourly earnings potentially noise. Richmond Fed President Lacker also implied he's still envisioning raising rates around mid-year. So, as far as we know, the figures didn't change the Fed's outlook, and so don't change my outlook for the dollar. The Canadian unemployment rate remained unchanged in December, while the labor market lost 4.3 thousand jobs. This is consistent with the Bank of Canada's concerns about significant slack in the labor market. Given falling oil prices and the slack in the Canadian job market, I expect the Canadian dollar to remain vulnerable. Today's schedule, rather empty. During the European day, we have no major events or releases. In the U.S., we get the Labor Market Conditions Index for December. This is a relatively new index that draws on a range of data to give a better sense of employment conditions in a single measure. In November, the index came at 2.9, so a reading above that, following the strong non-farm payrolls, should indicate an improving labor market. Also, Atlanta Fed President Lockhart speaks again. It'll be interesting to see if a weekend of reading changes his view from what it was when he was interviewed on Friday. As for the rest of the week, on Tuesday, Japan's current account surplus is expected to fall a bit, which could prove negative for the yen. Sweden's CPI is expected to show that the country fell deeper into deflation. The UK CPI is expected to fall below 1%, which could push further back expectations for tightening and add to the negative sentiment towards sterling. On Wednesday, the Fed releases the Beige Book 2 weeks before its January 27th to 28th policy meeting. Retail sales for December are also coming out. Thursday, Australia's unemployment data is expected to show a slowdown in job growth, which could prove negative for the Aussie. From the U.S., we get the Empire State and Philly Fed surveys for January. Finally, on Friday, Eurozone's final CPI for December, expected to confirm the preliminary reading that showed the bloc in deflation. The U.S. CPI for December is also coming out, and the forecast is for the rate to fall below 1% because of falling energy prices. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.